Okay, hello everyone. Welcome to NorCal's webinar on coronavirus federal legislation explained for youth soccer. Our objective today for the webinar is to provide everyone with an overview of the recent legislation, how that translates into help for your clubs during these difficult times. We are aware that many of you will have some prior knowledge and understanding of the topic, as there's been a lot of resources released over the last week, and also things are changing on a fairly regular basis at the moment as well. And so we know a number of you have kept up to speed with that. So as such, we're going to give an overview of the details to start with, but also focus a good amount of time today to dedicate a good amount of time today to answering any questions you might have for the panelists. So thank you in advance for those who have sent in questions. And we'll work through those, and you can also send in questions throughout the webinar. A little bit of housekeeping to start with. All attendees are set to mute with your camera off. It will just be the panelists on show today. Please use the Q&A feature for any questions you have. I'll moderate them and push them to the panelists at the appropriate time. So we have some important resources available on the NorCal website. If you are able to have that open at this time, you'll be able to see that there's a number of resources available and links to guides on some of the federal legislation, which can give overviews, things like the National Council of Nonprofits, the Small Business Owners Guide to the CARES Act, and the US Chamber of Commerce. So feel free to have those open during the presentation if you feel that helps you as well. So our objectives today to give an overview of the CARES Act, an overview of the state of California legislation, an overview of different loan options available to clubs and the application process, and be here to answer any questions you have. So we're very fortunate to have two experts in their field with us today, who also have a lot of experience in the management of youth soccer clubs in Northern California. So they're able to speak to both sides, both the legislation and financial side, as well as the point of view from the clubs. And they've gone through a lot of the processes you guys are going through right now. So we have Justin Howard, who works as Deputy Secretary for Fiscal Policy and Admin at the State of California in the Government Operations Agency. Justin's also the Director of Admin and Finance at Davis Legacy Soccer Club. Zach McSweeney is a CPA at McSweeney & Associates, and also the Treasurer at San Juan Soccer Club in Sacramento as well. So thank you for both for joining us today and sharing your expertise with the clubs. So without further ado, we're going to jump into an overview of the Coronavirus Aid, Relief and Economic Securities Act. So Zach, would you like to take the lead?
Sure. Thank you for having me on today. Everybody, I hope you're safe and healthy at home. Justin and I would just like to communicate to everybody that all of this information here is informational only. Before you decide to act for your club or for yourself on anything that you're choosing to do based on what we're talking about today, please consult your own CPA, tax preparer, advisor, or attorney. But that being said, we'll just carry on and go through all the information. So we're going to review the Paycheck Protection Program, the Economic Injury Disaster Loan Program, some of the CARES Act items that have come about, charitable giving incentives, employee retention payroll tax credit, the ability to delay payment of payroll taxes, direct payment to individuals under the CARES Act, based on their adjusted gross income and their tax return filings, and expanded unemployment insurance, and then amendments to new paid family leave mandates that were put in place due to the coronavirus. So going forward, I'm going to talk about the Economic Injury Disaster Loan Program and the Paycheck Protection Loan Program. There's a lot of confusion, misinformation, and incomplete information out there regarding these two programs. And hopefully by the end of the day, everybody will have a very clear definition of and understanding of what these programs are and also where you can go to take advantage of these programs. I think that's been, a very confusing part, at least for all of my clients who we've passed all the information along to. They don't know what loan they're applying for, who to go to get the loan, what they need to apply for the loan, and what they're going to get out of it, and really what the rules are, because some of these have rules that go along with them if you want them to work the way they're designed to work. Starting off with the economic injury disaster loan, that loan is applied for directly at the SBA website. You do not go to your bank for this loan. There will be a link later on in the presentation to this application. And Justin, or Andy, if you don't mind going back a slide. Thanks. There we go. There will be a link where you can go to make that application, and I'll give you the information on what you need to do the application online. The Paycheck Protection Program is a completely different program that is through your bank. It is still an SBA loan, but you go directly to the bank to get that loan. That's the one I really feel that's really out in the forefront on all the news. Banks have taken different positions on these loans. It seems to be the rule of thumb is go to your bank that you have a banking relationship with to initiate the Paycheck Protection Program loan. That being said, we're being told that banks aren't necessarily helping everybody that walks in the door, even if they have a checking account, savings account at that bank. A lot of banks are taking the position that you need to have a lending relationship with them, a line of credit, an outstanding loan of some sort before they're going to lend you the money under the Paycheck Protection Program. My personal feeling is that wasn't the intent of the program through the SBA, through the federal government, but the banks have kind of taken it and run with it. I've dealt with 6 different banks for my clients. All the banks are requiring different things. We'll give you a general checklist of the things that you're going to need, but the best place to go, once again, is reach out to your bank. They'll give you exactly what they need, and hopefully you can get into that process. Just an hour ago, we had a call with a local smaller bank. They stopped taking loan applications because they believe that the money's dried up already on $349 billion that was put out there for the Paycheck Protection Program. I've heard from clients who have had success and clients who have been denied simply because they don't have a lending relationship. This morning, they were trying to pass an additional $250 billion for this program. And as of right now, it hasn't passed through any legislation yet. The 2 different sides are arguing on their own points that they want. I think eventually it'll get pushed through because it's very important. So if you haven't got an application in yet, I'd say go ahead and do it. And if you've been denied, keep an eye out for that additional $250 million being passed, and contact your bank immediately, because hopefully they will service you first if you've got an application in place that was denied. So the economic injury disaster loan, it's a small business loan. These are not new. These have been out in the SBA for a long time. They just are now available because of the coronavirus pandemic. So they made these available to small business owners, nonprofits. You're able to apply through a streamlined process with an advance of up to $10,000. Once again, things are changing hourly, daily. I just found out this morning, which I wasn't aware of, and I've been working on this nonstop since it came out, that the advance is up to $10,000, but it's $1,000 per employee up to $10,000. So don't just sign up.
I would just add that they just recently sent out some clarification on the regulations surrounding this program from the SBA, and that's where that came from. They put out rulemaking, pursuant to their rulemaking authority is where they put that requirement into place. Yeah. So if you have 10 employees, you can get an advance of up to $10,000. If you've got 1, you'll get $1,000. I put in an application for this for San Juan Soccer Club on March 26th before this streamlined application was in place, thinking that it was being handled, and it wasn't. So I reached out directly to the SBA, had to go back and redo the streamlined application.
And that was on Monday. And the person at the SBA told me, give it 7 days before I call back for any kind of update. So that's kind of the best information I have on what their processing times are looking like. I know that they're very overwhelmed. When I got on the phone, I was caller number 1,400 and something. Took about an hour. It was very quick, but that's the kind of, applications that they're dealing with, very, very high volume. So this economic injury disaster loan is available with an advance up to $10,000. The advance does not have to be repaid. Who is eligible for this loan? Any small business, nonprofit that has less than 500 employees, so sole proprietorships, independent contractors, self-employed persons, and nonprofit organizations. So they are loans up to $2 million based on need. Once you get through the application process and these things are put in process with the SBA, they're going to contact you and ask you, what your loss is. From a soccer club standpoint, my belief, Justin, correct me if I'm wrong, your loss is the lost fees that you are not collecting from your players.
Yeah, I would definitely add to that. Two things is, for those of you who do tournament hosting or events, any lost revenue from that during the period of time is also a economic injury, along with your player dues that come in. To the extent you have any other revenue streams as well that are regularly recurring, either on a monthly or annual basis, and they happen to impact during that time, I would also claim those on there. You may have some type of rebate program with various vendors, who knows, to the extent that you get revenue from those types of things, those can be included as well, to the extent those aren't coming in anymore due to like lack of sales of just products to your membership.
Great point. Thank you. So these loans can be used for all kinds of purposes: fixed debts, payroll, accounts payable, other bills that you can't pay basically because of the impacts of coronavirus. The interest rate for small businesses is around 3.75%. Nonprofits is 2.75%. And the Small Business Administration has said that they will stretch these loan terms out as far as 30 years, but it's going to be assessed on a case-by-case basis. So if you have the ability to pay it back quicker, and I do not have any guidance on how they're going to measure ability, but they're going to have their own system in place to see what they believe is your ability to pay back this loan. But it can stretch as far as 30 years out. Off to the right there, we have a link that goes to the SBA's website for some economic injury disaster loan information, and then also a link to the streamlined application. So when you go through and do the streamlined application, I put together just a basic checklist of the things that you're going to need. You go through different phases, and you cannot proceed to the next step until you've finished the prior step or the step you're working on. So in the first step, you're going to need all your entity information: identification numbers, addresses, phone numbers, number of employees that you had as of January 31st, 2020. And you'll move on to the financial information. You're going to have to put in your gross receipts for the last 12 months and your total expenses over that same period. Then you'll move on to the ownership info. This one kind of threw me for a loop because as a nonprofit, there aren't any owners, but you have to put in information in these fields or you cannot proceed to step 4 and finalize your application. So they're going to ask for owner's name. They actually do ask for a social security number, contact information, etc. And then you'll proceed on to the 4th step. And in that step, you can provide your bank name, account number, and routing number for them to direct deposit whatever your advance payment will be. And then finally, when you hit the submit, you're going to get a application number. Make sure you print that out, write it down or something, because if you need to get back to the SBA to ask questions, their only way of knowing it's your application is to have that application number. So it's really important to keep that in hand. So before I move on to the Paycheck Protection Program, Justin, do you have anything you want to add to the EIDL?
I would just add that as far as the ownership info goes, really what they're looking for there, my understanding, is who has the authority, especially if you're a nonprofit, in order to enter into and take actions related to your nonprofit. So typically you can either list like your financial person, whether it's a treasurer or some other role, and or your club president, whoever has the authority to basically bind your organization to any type of loan activity here. So I would list them down as the entities.
Thank you. Moving on to the Paycheck Protection Program. This is the loan that you're going to go to your bank for. I'll go through a list of things that you're going to need. There is an application up on the SBA website, and we have a link to it here. You're going to need to print up and fill out that application and give all the things that I have in my list at the back end of what we're talking about now, and have it ready to go. But the idea here is it's a financial initiative that was designed to have businesses keep their employees on their payroll for at least 8 weeks. It was passed at the end of March as part of the CARES Act. And like I said before, it was $349 billion in forgivable loans. They began processing these loan applications on April 3rd. It came out, it was very scattered. A lot of the smaller banks were ready to go and hit the ground running on April 3rd. A lot of bigger banks either didn't start processing until late in the day or even a day or two later. So it wasn't very straightforward. There was a lot of misinformation and incomplete information. So it seems to have kind of settled down a little bit, and the banks are processing through these things. So if you haven't spoken to your bank yet, get to them quickly, because the funds are going fast, possibly already gone, but get out there and get in line in case this extra $250 billion is passed here, hopefully shortly. So any small business or 501c3 nonprofit with 500 or fewer employees can go out and get this loan. And independent contractors can begin applying as of April 10th. One of the issues and one of the things that was really confusing to begin with was they came out and they said, if you had independent contractor type, you wouldn't call them employees, but payments to independent contractors, they would qualify originally under the PPP program. And then the SBA came out and provided new guidance that said, no, they do not count. Only true employees count, that are on a W-3 that you filed for 2019 and they received a W-2, and that the independent contractors can go out and apply on their own beginning April 10th. So as of right now, that's the guidance.
Yeah.
And if you're applying for it, go ahead, Justin.
Just to add to that, I mean, the purpose of that was really to avoid the double dipping, because there was a lot of confusion early on. They had to clarify, because as an independent contractor, you are not an employee, and in theory, you are running your own business and as a self-proprietor, and therefore you should be going out on your own, because you will retain all your own tax information and stuff to be able to prove and justify your need, versus having that go through another entity such as our soccer clubs.
Yep. So these loans are available for employees on their wages up to $100,000 per employee. It's capped at that amount, and you go through and calculate your average payroll over the 2019 period, and the loan is good for 2.5 times your average payroll. The funds can be used for payroll, paid sick leave, medical leave, insurance premiums, rent, mortgage interest, and utilities. The real kicker here on this loan, and something everybody needs to be aware of, is that in order to receive loan forgiveness, you have to use at least 75% of the money that you receive under the Paycheck Protection Program to pay payroll. If you don't, it'll be termed out in a loan that I believe is 1% over 2 years. So if you do get this loan, make sure you use at least 75% of it for payroll, so the entire loan can be forgiven, which is a phenomenal incentive, I believe, if you qualify and have the ability to get these funds. So you can apply through any Small Business Administration 7A lender, federally insured depository institution, credit union, farm system. But once again, we're finding out there in reality and in the real world, you need to go to your bank that you have a relationship with.
I'd like to just really quick on bank relationships, because I think this is very important just in general for these soccer clubs that are out there. You should really, really develop your relationship with your bank. Many of the smaller community banks are probably best for you to work with over the long term, because they already have those relationships with the SBA. That's pretty much what they're set up to do, is to service those small businesses in our communities, which are soccer's. For those of you that bank with the larger financial institutions, you'll see them slower to move on some of this stuff because they're very national minded organizations, and they don't necessarily think at the local level as much. So develop that relationship, because that could be your best friend over the long term of your entire organization, is developing that relationship with your bank. And it also streamlines the process too. I'll give you an example for our filing when we submitted our stuff for the EIDL, is they already had most of that stuff on file from us because of our relationship with our bank. So it really reduced how much paperwork I had to submit to the bank for our application.
So on these PPP loans, the payments are deferred for 6 months. There's no collateral, no personal guarantees, and there are no fees charged to the person taking out the loan or the entity taking out the loan. Forgiveness is based on the entity maintaining or quickly rehiring their employees and maintaining salary levels for 8 weeks. And the loan matures in 2 years at an interest rate of 1% if you do not meet the qualifications for the loan being forgiven. Over here on the right, we've got information and a link to the PPP loan page at the SBA, and then also a link to the application that you would fill out and get to your bank along with the other information I'll go over shortly. And that's here. So here are the things that you're going to need to apply for the PPP loan. You need that application that we just talked about, print it up, fill it out, and then you're going to need tax forms. You're going to need your W-2s for 2019 and the W-3, which is the transmittal form that shows the totals for all the W-2s. And this PPP loan is based on your 2019 payroll information. You're also going to need your payroll tax returns. So the 940, which is the annual transmittal, and all 4 quarterly 941 payroll tax returns. And then you're also going to need your payroll numbers. You need to calculate the average monthly payroll for 2019. And then you're going to multiply that by 2.5, and that will be the amount of your PPP loan. And that's right there on the top of the application. That's basically the calculation that you do there. Many payroll companies have already done these calculations for you. ADP, Paychex. You know, if you use a smaller payroll company, or if you do it yourself, you're not going to have that benefit. But I have seen those reports being generated out of some of those payroll providers, and it makes it much easier. And once again, there's been misinformation about, do you include payroll taxes? Do you not include payroll taxes? It's gone back and forth many times. As of right now, it's you do not include the payroll taxes that are paid along with the wages that were paid for your employees. So beyond that, in the CARES Act, there are a couple things that we wanted to highlight. One of them is the charitable giving incentive. So just flip here to my info. Under the CARES Act, they made it so individuals can claim up to $300 of above the line charitable contributions. So what it basically does is, if you don't itemize and you take the standard deduction in 2020, you can make a charitable contribution of up to $300, and it's going to be deductible on the front page of your tax return, where otherwise you would not have gotten that deduction if you did not itemize deduct. There's an employee retention payroll tax credit, 50% credit up to $10,000 of salary per employee, so a $5,000 maximum credit per employee. If you are partially or fully suspended and revenue dropped at least 50% in the first quarter of 2020, and you continue to pay payroll to your employees. The delayed payment of payroll taxes for 2020, you can delay the payroll taxes that you would have otherwise had to have paid. Half of them have to be paid in 2021 and another half in 2022. And then the other thing that's out there a lot in the news are these direct payments to individuals up to $1,200 per adult and $500 per child based on your adjusted gross income. For people who are single individuals, single filers, the adjusted gross income caps begins to cap at $75,000 and is completely phased out at $99,000. So if your AGI is over $99,000, you would not get this $1,200 payment. For married couples, begins at $150,000. It starts to phase out, and at $198,000 of adjusted gross income, you would not get this payment. I work, of course, in the tax field. We're doing a lot of tax returns right now. Anybody who has a refund, I'm suggesting that they put their banking information on the tax return to get a direct deposit, because not only will they get their refund much quicker, they're going to get these direct payments much quicker as well. The IRS is supposed to create a portal for you to be able to go in and input the information that you would otherwise input on your tax return if you didn't have a refund. So if you had to pay in at the end of the year, to get them your banking information so you can get these direct payments quicker. They haven't yet, but are supposed to have a portal up and going soon, so you can give them all of your information and your banking information to get these payments as quick as possible. There's also expanded unemployment insurance and covers workers who are furloughed, gig workers, freelancers, and it increases it by $600 per week for 4 months. And then there are new paid family leave mandates in place that they get pretty technical and kind of beyond what we really want to get into today, but just to let everybody know that they're out there as employers. It lowers the amount that employers have to pay to basically the amount that would be covered under the refundable payroll credit that we talked about above. Justin, you have anything else you wanted to add to?
I would just mention that some of these additional programs are separate from and cannot be utilized at the same time as the PPL program or the Paycheck Protection Program, the PPP program. So for example, my understanding is like the payroll stuff, the taxes and the tax credits, if you choose to opt to do that, you will not be able to do the PPP. So again, check with your tax advisors, your accountants and stuff, but there is some efforts here to not duplicate things in terms of being able to double dip for relief that's out there. Also, as far as the expanded unemployment, that's all administered through the state of California through the Employment Development Department, but it is broadened to include, as mentioned, freelancers and other things. So in theory, some independent contractor folks should be eligible for some of those benefits.
Justin, just on not using different aspects for the same purpose, there's one question that came through already. Can you comment on how to interpret not being able to use the EIDL and the PPP for the same purpose and what that means in reality?
Yeah, so my understanding is that you can actually apply for both the EIDL and I guess we're going to call it the PPP at the same time. What you can't do is use the EIDL funds for the same purpose for which the PPP funds are being provided, which is basically your payroll. So if you have other expenses that are outside of what you're going to receive the PPP for, you can use your EIDL for that, but you can apply for both at the same time.
Great, thank you.
So I think I'll cover this slide really quick. One thing that the state of California has done to help small businesses is they've made available about $50 million through the IBank program, which is basically a disaster relief loan guarantee program. So what this basically does is it's another mechanism similar to the SBA at the federal level where you would work through your local banks who have these types of relationships already with the California IBank, Economic and Development Bank, where you can get loans guaranteed up to 7 years. They'll guarantee up to 95% of your loans, and these can be used for various business activities so that you can to cure your economic injury that is resulting as a result of the COVID-19 crisis. So the difference here is there's not set rates. Those need to be negotiated with between you and your lender. But the good news is because they're guaranteeing up to 95%, it encourages lenders to loan that money, because should you somehow default, that particular bank will still recoup the vast majority of what it loans out. So this is just another avenue, to the extent you don't get anything from the federal process, that you could go through. I would definitely start with what's available through the SBA programs first, and use this as a fallback if you need to. Again, this is only $50 million, and it's only for California small businesses. So, and I can send Andy, and he can include later on a link to where that information is for you to get that application stuff.
That's great. Thank you very much, guys. We're going to jump straight in, unless either of you have got anything else to add on those two aspects before we move into the questions.
Nope.
Okay, we'll jump straight into some of the questions. So Justin, I know you touched on this a little bit towards the start. If you could revisit, for youth clubs, what would constitute the required economic loss for the EIDL application?
Yeah, so think about this in terms of the revenue that comes into your club, and that for the vast majority, that's going to be your membership dues or your monthly payments or quarterly payments, however you have it set up. So those players who are paying into your organization that basically fund, for most of us, 90 to 95% of our operations, that's going to be your economic loss. For the larger clubs who do other things and have other economic streams, you really need to think about losses related to any tournament hosting that you have done in the past, as well as any other like rebate streams where you were receiving revenue or from the sale of products that are out there. So that's really what your economic loss is. And I think what's key here is for you to be able to make sure you document that loss for the period of time. So if you're good at keeping your records from last year, you should be able to show what came in during that period of time to demonstrate the loss that you're, in theory, having a comparable loss now. So whatever that window is, you should be able to show what you've lost, because hopefully no one's paying dues right now. But if people are paying dues, then, well, you may not be incurring a loss.
Understandably, there's a lot of questions coming in about looking for clarification on the role of independent contractors here. So just to be clear, right now, is correct that clubs are not able to include independent contractors as part of the PPP calculations. Is that correct?
Correct. Yeah.
Okay.
It came out at first, it looked like they would be, but that is correct. As of now, you cannot include 1099 contractors in your application. You know, the next question, can you use the PPP loan money to pay independent contractors? When you apply for it, when you work with the banks, they're asking for all those payroll details. If you gave them your 1099s, they're not going to give you the money for the loan because they're looking for payroll information. If you did get a loan because you did have payroll and you did use it for independent contractors, I've seen discussions out there saying that, well, then it's just not forgivable. You know, if you somehow got your hands on the money through an application and used it for other than payroll purposes, i.e. payments to independent contractors, and even the next question, a third-party vendor who you pay a coach through, neither of those would qualify for the use of PPP loan funds as far as forgiveness is concerned.
Yeah. I think I'll add just here is what's going to be key for everyone is you have to keep track of your records and what you're using these resources on. At some point, your lender is going to ask for verification of these things so that they get verification from the SBA that they're being made whole for the fact that it's not being paid back.
And as the application process moves on and they free it up, hopefully tomorrow, to independent contractors. So if you have coaches, yourself, somebody like that, you're not going to have those payroll forms. You're going to have your 1099. Get your 1099 for 2019 available, and you can do the math on it, divide it by 12 and multiply it by 2.5. I assume as these applications open up, that's going to be your calculation of what the PPP loan funds available to you as an independent contractor would be.
I will note one more thing here is I have heard some banks given the impacts that 85 have had in California, where in theory, most coaches were converted to, under the law, most coaches were converted to employees starting January 1st of 2020, that some banks are allowing you to submit 1099 information if you can verify that you've converted those people to employees as of January 1 and the amounts that you're paying are the same, so that they're using that as a proxy for your employee salaries beginning January 1st.
So you'd be able to use last year's salaries to calculate it and use PPP?
Yes, but I will stress that this is case by case, so every bank may be different. There is not a set standard that every bank must follow in calculating this. That's why there are differing like calculators that are out there that are coming from all the various banks.
So touching a little bit more on the process here for independent contractors to put in applications, does that look exactly the same as it has done for small businesses and nonprofits starting from last week? And if so, where would independent contractors have to go to put in an application here?
As of right now, I would say go to your bank. That's the best place to start. You've got to start somewhere where you have a relationship until something changes. I know that this extra $250 billion that they're trying to pass, the argument is, how's it going to be used? Because I guess people are feeling like it wasn't getting used in kind of the intent it was supposed to, and they want to make sure it gets out to certain individuals. They had talked about women, minority, veteran-owned businesses, and underserved parts of the country where people may not have direct business or banking relationships. So as of right now, I'd say go to your bank, because that's the best place to start. Justin made a good point earlier about the smaller banks, the regionals, the credit unions, those types of things. If your bank can't help you, I would say the next step would be to go to a bank like that. Don't necessarily run down to one of the majors, because they honestly, in what I've seen, is they're taking care of their existing customers who owe them money. So, you know, your best bet's going to be, if your bank can help you, run to one of the smaller banks in your area. That application, I haven't seen them put out a separate application. It should be the same. It's just the calculation is going to be based on your 1099 income.
Okay. And for clubs, do the employees who are going to be paid with the PPP funds, do they need to be the same employees who the club paid over the last month? For example, if the club paid coaches up to December and hired new coaches in January, does that make any difference?
I have not seen anything that it had to be the exact same employees.
I agree. I've not seen anything related to that. The only criteria is that you do not reduce. So if it was 20, it should be 20 again instead of 18 or something like that.
Yep.
Okay, thank you. There's a couple of questions looking for clarification on going back to the EIDL. So Zach, one for you. Could you provide a little bit more information when you talk about a loan advance which would not have to be repaid, but then you spoke a little bit about repayment options. So could you clarify what constitutes, what part of the loan wouldn't have to be repaid and which part of the loan would be?
So the way I understand it now is that advance payment to you would not have to be repaid. So that one that we talked about, that's up to $10,000. As of right now, I understand it's $1,000 per employee, up to $10,000. If you get that advance, the understanding is that advance would not have to be repaid. The additional money that you're going to get under the EIDL based on what you prove to the SBA as your economic loss, constituting all the items that we talked about, that part is going to have a term on it of up to 30 years. And then the rate will vary based on whether you are a for-profit or nonprofit entity.
And those EIDL loans, can you use those to pay independent contractors?
Yes.
Yep.
Okay.
I would say the EIDL loans can be utilized to pay for basically your ongoing business costs, whatever they may be.
Okay. Justin, you mentioned the AB5 legislation a few minutes ago. Can you touch on any knock-on implications there may be for clubs going through this process, considering the AB5 legislation?
So, I mean, as it stands at the state level, I mean, AB5 is still in place. It has not changed. There are various efforts out there to make changes to AB5. I think one thing people need to think about as going forward is one of the things that AB5 was intended to do by the parties that supported it was to help folks in times like this. Right. The intent was really to turn a lot of people into employees so that they would be eligible for various benefits, including unemployment insurance, et cetera. That was one of the major pushes, right? FMLA eligibility, things like that we don't pay or aren't covered by clubs when you're an independent contractor. So there's going to be a lot of discussion in the legislature about many of these efforts to roll back AB5 and who it may apply to. Especially, they're going to view it in the lens that, you know, if these people were always paying into the unemployment insurance like they should have, we wouldn't be in nearly the precarious situation we are fiscally at the state. So I think things might get a little bit tougher on some of these rollback efforts that you see out there related to AB5 as it relates to your current situation right now. If you haven't converted your employees or your coaches to employees, they're 1099s. You're obviously free to continue as that, but there are risks associated with that. You know, at some point you'll have to make a decision whether to convert or not to convert your folks. And again, the 1099 folks can then go out and apply on their own for all these various programs, whereas those who are employees or who have been converted to employees, the club can apply for these loans and continue to pay those individuals should they be given the loan. Thank you.
Still quite a lot of questions coming in looking for clarification on some things surrounding independent contractors here. So independent, if you have coaches who are independent contractors, they can apply for the PPP from tomorrow. How does that look for the forgiveness of the loan for an independent contractor? What would they have to do to show, whereas you have small businesses who can show that they've got ongoing payroll? What can an independent contractor do to look at the forgiveness of the loan?
So Mike, I'll just put out there what I think it'll be for, but is they're going to want to, you're going to have to show that you had income coming in, and you're going to have to use it to essentially you're paying yourself, you're covering your wages that you otherwise would have received through your contracts. So make sure that you have those said contracts to show what you would have had coming in order for them to be forgivable. That is my interpretation at this point. They haven't put out any specific guidance on that I have seen as of yet, but I believe it'll be something along those lines, as you'll need to be able to demonstrate that this was income that you would have received. And also that you weren't receiving it. You know, correct. If you're getting it, don't go out and apply for it. Right. So otherwise it won't be forgiven. Yeah. In theory, hopefully you have something from your board or your leadership in the club that shows that they've told you that they're no longer paying you, or that they're terminating your contract due to the crisis or something like that.
So any clubs or any coaches who continues to be compensated as an independent contractor by a club wouldn't necessarily they wouldn't qualify for this loan?
They may qualify for the loan, and I'm not going to say they wouldn't get it. They may go get it, but if they do get it, my thought is on the back end, when you go to try to ask for forgiveness of the loan, they're probably going to be asking you, did you really not get paid? If you're getting paid, I imagine they're not going to forgive that loan on the back end. This is all very new. The SBA and the banks are overwhelmed with these applications. So they're all handling these things differently. Some of them are going very slowly and making sure they dot all their I's and cross all their T's, and some of them are jamming them through quick to try to service as many people they can. So someone who is getting paid may be able to get a loan through. I would just be aware of, you may not have loan forgiveness on the back end if you pull that off.
Okay, great, thank you. Here's a question from a club that's volunteer-based. So it says, our board members fund the club. They also volunteer, coach, and manage the nonprofit. Our incomes have been impacted. We don't have, we don't have the revenue because we don't charge our players or have employees. What would you recommend that we do?
I think the best place to go there is the EIDL loan. And then you're going to have to put together what your economic loss is, what the lost revenue is, what you're not getting from the board members or from the players, and go forward with hopefully getting a loan based on those purposes from the EIDL. If you don't have employees or independent contractor paid coaches that can go out and get their own PPP loan, there's really nothing to do there.
Right. I mean, something you're gonna have to look at is like, what costs are you still incurring that you otherwise, as a result of the shutdown, that you can't pay? I mean, what are those things? And that's what you would, if you still need to cover them, yeah, I would apply for the EIDL and make a case there.
Okay. We have a few questions coming in regarding referees as independent contractors. So a few clubs asking, since our referees technically fall under the independent contractor category, would you recommend the club apply for a PPP, or would the referees apply for unemployment themselves?
The referees should do that themselves.
And if they're independent contractors, they wouldn't apply for the unemployment, I don't think. They would go apply for the PPP loan themselves. The club would not be able to apply for them.
Okay, great, thank you. Just scrolling through a few more of these questions. If we're keeping our 1099 coaches on until the end of May, and if we don't start up again in June, then can the 1099 contractors then apply for relief through one of these programs if they continue to be compensated until the end of May?
They definitely can. My thought would be this first $349 billion went fairly quickly. If what we're hearing is true, that they believe that it's kind of at the end of it. That was a fixed amount of money. So if they pass this additional $250 billion, it sounds like there's a lot of people in line. I assume a lot more people are going to go get in line. And as of this morning, the feds came out and said that they're going to guarantee these loans, kind of like what Justin was talking about in his piece from the state. So that's going to entice the banks to do more of this kind of lending because the loan's now guaranteed. And with that, I assume you're going to, if a lot more banks open up and start taking these applications, if that $250 billion comes online, it's going to go even faster because there are banks out there now that are not dealing with these PPP loans. So you run the risk of waiting until May or June and then not being able to pay the coaches and telling them to go apply for these PPP loans on their own and having no money left in the PPP program. So that's just something I would be aware of.
Okay, we have some clubs asking about coaches who have taken a pay cut, who are not getting paid 100% of their salaries during this time, either independent contractors or employees. How does that look, either as a club applying for a loan, or if the coaches themselves as independent contractors are applying for the PPP?
So as an independent contractor, I would assume they could go in and apply for the PPP loan starting tomorrow for the differential. They're going to have to prove, that their wages were cut or reduced. And like Justin said, have some type of documentation probably from the club that was formal and that has happened. On the club side, part of getting the PPP loan, it's based on 2019 figures. And they're going to ask you how many employees you had. So if you get that loan based on 2019 figures and in 2020, you have fewer employees, it's going to impact how much of that loan is forgiven. So it's going to impact that calculation on the back end when you go to ask for loan forgiveness. And also the dollar amount. You're supposed to maintain salaries.
So you mentioned that the calculation was based on the 2019 total.
Yeah.
A couple of people have asked about the initial language of the CARES Act was talking about the average of the period between February 15th and June 30th. Can you clarify on that, please?
Yeah, so once again, guidance comes and goes and it gets confused. And the most recent guidance is 2019 figures.
Okay.
I assume that they went that way because it was figures that are readily available and really close to, you know, give or take a couple months, you're probably around the same number. So they're trying to help people, in my opinion, get money as quick as they can. So they're just letting them use the 2019 figures. So those are the figures to use as of today.
And do you need to have filed your 2019 taxes as part of this, or is that irrelevant?
No, I haven't heard of any of the banks denying a loan because they didn't have their 2019 tax returns done. Some of them are asking for tax returns. So you can give them the prior year and a year-to-date or a 2019 profit and loss statement or something like that. Some banks aren't even asking for that. So
right. I mean, the tax, yeah, and I'll add to that. I mean, the tax deadline hasn't even hit. And for many folks, the tax deadlines have been extended, tax filing deadlines. So if you have any of your just kind of pro forma documents that are built through 2019, most banks are accepting those if you just have your basic P&L and supporting documentation.
Okay, great. Thank you. We have a question from a club here. I've been told that the payroll must be used within 8 weeks of the loan funding in order to be forgiven. As we have most of our payroll in the fourth quarter, how can that work for us, basically? If they will apply for a loan based on last year's costs, but they won't necessarily spend that money within the 8 weeks because their payroll's in the fourth quarter.
My understanding right now is that it's going to impact whether or not the loan is forgiven and how much of the loan is forgiven. So if they're not using all those funds in the 8 weeks, it's going to impact when they go to ask for loan forgiveness, what is actually forgiven on the back end.
All right, you have to keep in mind that the design of this is to help small businesses, soccer clubs, us, right now during the period of time in which nobody is out and about doing activities, right? All these businesses, non-essential businesses, are shut down and are being impacted. And the goal of this is to provide money to keep people employed during this period of time that we are shut down. So come fall, if you're up and running, or come winter, if you're up and running, in theory, at that time, you're not suffering any impacts and you'll be collecting revenues. Now, if you are collecting revenues between now and the fall in order to make that payment come the fall, that's a little bit trickier situation.
And what advice would you give to a club that has some reserve funds they intend to use to pay coaches, but they don't have enough to pay for the full season? Should they pay the coaches for full in April and use a remainder for ongoing time, or to portion out over each month? Essentially, is it best to have clubs inform their independent contractors as soon as possible when they can no longer pay them? Does that make sense?
It makes sense. It's a very tricky situation because it's going to vary club by club, right? So there's not a one-size-fits-all answer here, unfortunately. You're going to have to do an evaluation of your operating expenses, your reserves, what is essential for you to continue paying on now in order to hopefully not fall into bankruptcy or some other dire financial situation that you can't get out of. And that's just, unfortunately, it's going to vary. I wish I can give a more specific answer. I just can't. If you need to not pay independent contractors so you can pay other ongoing obligations such as debt and things like that, well, there's a call on your revenue typically if you do have debt. So if you have reserves and those things, I would definitely consult with your tax and your legal counsels and getting that type of advice. But I mean, boards are going to be faced with some tough decisions if they only have minimal reserves in order to get through this period.
Yeah, and as far as notifying independent contractors, I think it's going to vary by club. My personal opinion as a club is I would think if you want to maintain goodwill with your coaches and as independent contractors in hopes of hiring them back once things are back to normal, you would want to be as upfront and clear and concise with them as possible and not just pull the rug out from them at the last minute. That's just my own 2 cents.
Oh, yeah, I completely agree with Zach on that. The quicker that you can let them know what's going on and provide information, the better, because that gives them options and what they need to do. So if you're delaying it somehow and they miss critical deadlines for them to be able to go and apply for things, that would be a disaster for them. So let's be very conscious about those deadlines and when you think you need to make decisions as a club.
And just to be clear, the opening of the PPP application for coaches, if they're independent contractors, would be tomorrow.
Yes, that's my understanding.
Okay, we're very conscious of everyone's time. There's a few other questions that we'll do our best to answer offline, and as part of the follow-up, we'll try and send an overview of the questions and answers in this session to everyone as part of the follow-up from this webinar. One question for both of you before we close is, in future, what can clubs best do to prepare for situations like this that may occur in the future?
I think Justin made a great point earlier about having a strong banking relationship. You know, wherever you choose that to be, you know, there are lots of banks out there. So starting there, I think, is a phenomenal point, because in times like these, when you need help, you need somebody who's got your back, who you can pick up the phone and call, and who's going to answer your call and not get back to you for a week or two while you're panicking and trying to figure out how you're going to survive this, or how you're going to get through it, or how you're going to get some money that you desperately need. So I think that that's a fantastic point. Having reserves. With what we do, that's not always easy, right? But correct budgeting, knowing what you're bringing in every year, knowing exactly what your expenses are, and starting to build some type of a reserve for a rainy day is a fantastic thing to do. I understand that isn't a luxury for everybody, but you know, everybody can budget, everybody can save something. I think that it's very important to do that, just to make sure that, you know, when times like this come upon you, you've got a little bit of ammunition to survive.
I have nothing further. Those are my 2 big takeaways. You want to prepare yourself for the future. The first, as a club, is you really should have a reserve policy first and foremost. You need to find a way to set aside funds for basically a rainy day, whatever that may be. In this case, it is unfortunately the COVID-19 situation that's in front of us. But you should have a minimum, in my personal opinion, have 2 months worth of operating reserves in the bank somewhere that you do not use for any other purposes. If you don't have that, you should work towards that goal. That should be a priority of your board or organization. And then definitely with the bank, we have a great relationship with our bank, and that will go. I personally believe the smaller banks are best for you to work with versus the bigger banks, because they're a little bit more sensitive to your needs, and they tend to have a more flexible approval committee process if you have that relationship with them. So
that's great. Thank you very much, guys. On behalf of NorCal and all the member clubs, just want to say a massive thank you to Zach and Justin for coming on, taking your time and sharing your expertise with the clubs here. This is clearly an area that is very important for all the member clubs within NorCal. As and when more information and resources become available, we'll continue to send them out to the clubs. We'll follow up from this webinar with a recording of the webinar. We'll send the full slide deck. We'll do an overview of the questions and answers, and we'll provide links to any other documents. If you have any feedback for us, areas that you'd like to see us cover a little bit more, even any follow-up questions that might come to you in a couple of hours' time, please feel free to send them across, and we'll do our very best to get some answers for you on that one. Big thank you to everyone. Thank you for attending. Thanks again to Justin and Zach, and we hope everyone is safe and sound, and we hope to see you back on the field sooner rather than later.